Hey there! Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge, explanation, and news updating daily.
Hey everyone! Welcome to today's video packed with some juicy updates from the crypto world. First off, word on the street is that Donald Trump might start accepting crypto as donations for his presidential campaign. And if he gets back into office, cryptocurrencies could be in for a boost. Plus, in the US, the House of Representatives just gave the SEC a thumbs down on their anti-crypto stance. Speaking of the SEC, they're still going strong on Ripple. And over in Japan, Coincheck is gearing up to hit the Nasdaq, making it the second crypto exchange to do so after Coinbase. Oh, and by the way, Bitcoin's price today is around $61,600. Stick around for more on these exciting updates. Hey there! So Donald Trump, you know, the former US president, he's been stirring things up in the crypto world. Just the other day, he was all like, "Let's shake things up and accept crypto for my presidential campaign donations." Pretty wild, right? He was chatting with his NFT mugshot buddies and dropped the bombshell that he's totally open to getting campaign funds in crypto. This scoop came straight from Frank DeGods, the big shot behind those flashy DeGods NFTs on Solana. Trump's exact words were, "Can we contribute to my campaign with crypto?" I believe the answer is yes. And he's not just talking the talk. He's ready to walk the walk. If crypto contributions aren't a thing yet, he's vowed to pull all the strings to make it happen. He even threw a playful jab at President Joe Biden, suggesting the guy's clueless about crypto. Trump's message was clear. If you're into crypto in any shape or form and you're rooting for it, you'd better cast your vote for me. This all went down at a shindig Trump threw, where he hung out and had dinner with his NFT mugshot collectors during a break from his trial. To get an invite to this exclusive event, you had to snag at least 47 of his mugshot NFTs at $99 a pop. When quizzed about keeping crypto businesses stateside, Trump didn't miss a beat. He's all about making sure these ventures don't pack up and leave the US because of unfriendly policies. He's adamant that if crypto's getting the cold shoulder in the States, he'll put a stop to it. After all, he doesn't want to see them go. Trump's big on the idea that if the US is serious about backing the crypto industry, the government's got to lay out the welcome mat for these companies to thrive at home. Avichal Garg, the co-founder of Electric Capital, was over the moon about Trump's new take on crypto. He's convinced someone's giving Trump top-notch advice on crypto matters. But Garg's also worried that if Biden keeps pushing against crypto, it could spark a major backlash. And we're not just talking about SEC policies and Gensler here. It could turn against Biden and the Dems too. Right now, Trump's gunning for the Republican nomination in the upcoming November 2024 U.S. presidential election. And let me tell you, the crypto views of Trump and Biden are like night and day. Under Biden's watch, there's been a laser focus on tightening the reins on crypto to safeguard consumers and keep the financial ship steady. The SEC, during Biden's time at the helm, has been on a mission to clamp down on money laundering and other shady dealings with crypto assets. Remember when Tornado Cash got the boot in 2022? Yeah, that was them. But Trump? Oh, he's done a total 180 since his days in the Oval Office. Back then, he wasn't exactly crypto's biggest fan, calling it as flimsy as a house of cards. Now, though, he's rubbing elbows with the crypto crowd and even launched his own NFTs. If he makes a comeback as president, the word on the street is we can expect a friendlier crypto climate and maybe even a rollback on some of those tough regulations. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Today, we're seeing another day of Bitcoin dipping down to $61,500. It looks like Bitcoin's in a bit of a swing lately, with today marking the third day of decline since it hit $64,000. Now, this price adjustment doesn't seem too drastic at first glance, but if it keeps up in the coming days, investors might need to take a closer look. Will Bitcoin bounce back and keep climbing, or is this just a gentle correction to give folks a chance to buy in for the future? Nobody can say for sure. That's why it's important for us to keep an eye on things together. Let's see where this ride takes us. All right, let's chat about what Standard Chartered Bank is saying about Trump and the crypto market. If Trump gets back in the Oval Office, they're betting that the crypto scene could really take off. Here's the lowdown. So the bigwigs at Standard Chartered are like, if Trump wins again, it's good news for crypto. They're pretty stoked because they think his administration will roll out the red carpet for a friendlier crypto management scene. And get this, they're not just throwing numbers around. They've got some serious targets for Bitcoin. Like, they're seeing it hit a whopping $150,000 by the end of 2024, and then zooming to $200,000 by the end of 2025. Talk about sky high. But why all the optimism? Well, they're eyeing the Fed, which has been printing money like it's going out of style to pay off Uncle Sam's bills. This has got folks jittery about the dollar's value, and they're starting to eye crypto as the new cool kid on the financial block. Jeff Kendrick from Standard Chartered is laying it out straight. He's saying, in the not-so-rosy financial future of the U.S., we're betting that Bitcoin will be the go-to shield against a wobbly dollar and the shaky trust in U.S. Treasury bonds. They're thinking that if the dollar starts to wobble, Bitcoin's going to shine. And Kendrick's not done. He's talking about 3 big ways the U.S. fiscal policy could shake things up, the Treasury curve getting steeper. This means the long-term bond yields could jump higher than the short-term ones. It's like the market's whispering, inflation's coming, which could make the dollar less appealing. Break-evens climbing higher. This is all about the gap between what bonds promise to pay and what they're actually worth, hinting that inflation might be on the rise. And if inflation goes up, the dollar's charm goes down. Term premium on the up. This is the extra reward investors want for holding on to longer-term bonds. If this premium goes up, it's a sign that the market's getting nervous, and folks might start looking for safer or more profitable places to park their cash, like Bitcoin. Now, if Trump gets the keys to the White House again, his team could speed up the exit of government bond buyers who are getting cold feet about America's financial health. During Trump's time, there was an average yearly net sell-off of U.S. government debt of $207 billion, compared to a mere $55 billion under Biden. The report wraps up by saying that besides the passive boost Bitcoin could get from a drooping dollar, a second Trump term could actively cheer on Bitcoin and digital assets in general, with chill regulations and a thumbs up for U.S. Bitcoin and Ethereum ETFs. Looking back, the U.S. economy had its best glow-up during Trump's 2016-2020 term, with the S&P 500 index jumping over 33%. And right before COVID crashed the party in February 2020, the unemployment rate was at a 50-year low of 3.5%. Fast forward to today, and we're just 6 months out from the U.S. presidential election, with Biden and Trump as the headliners. So, Congress just had a bit of a showdown over this thing called SAB 121. It's like a rule book from the SEC that was cramping the style of banks holding on to crypto for their customers. On May 8, 2024, the House was like, nah, let's scrap it. And they passed this bill, H.J. Res. 109, to kick SAB 121 to the curb. Here's the scoop. SAB 121 was making banks put any crypto they're holding right on their balance sheets. But that's not how it goes for traditional stuff like stocks. Congressman Mike Flood, who's a Republican, spearheaded the charge against it. He said it wasn't playing fair with banks that want to get into the crypto custody game. Now, this wasn't just a one-party rave. It got a thumbs up from 21 Democrats and a whole bunch of Republicans, totaling 228 votes for ditching it, against 182 who weren't on board. But wait, there's a twist. President Joe Biden's not feeling it. He's all set to veto this new bill. The White House dropped a statement the same day saying they're totally against axing SAB 121. They think it'll mess with the SEC's vibe of keeping investors safe in the wild west of crypto markets and the bigger financial picture. The fear is, if the SEC can't keep its regulatory groove on cryptocurrencies, it could mean trouble, like big-time financial instability and a shaky crypto market. Introduced back in March 2022, SAB 121 was the SEC's way of telling financial institutions how to handle crypto on the books. But it was pretty much a no-go for banks to hold crypto for their clients. Some big names in U.S. lawmaking, including SEC Commissioner Hester Pierce, were not having it. They said it was putting a damper on banks' willingness to be crypto custodians, and that it wasn't treating crypto the same as other assets. The bipartisan move to toss out SAB 121 got the green light, and the House Financial Services Committee, HSFC, said it's all about protecting consumers by knocking down legal hurdles. This way, tightly regulated financial institutions can step up as digital asset guardians. HSFC Chairman Patrick McHenry didn't mince words. He slammed SAB 121 as a classic case of Gary Gensler's SEC going overboard with rules that make it tough for banks to hold crypto for their clients. All right, let's get down to brass tacks and chat about this whole Ripple versus SEC showdown. So the SEC is standing its ground big time. They're not buying what Ripple's selling, this whole "we've been good since 2020" spiel. The SEC's like, hold up, we need to slam the brakes on Ripple with an injunction, because they're pretty sure Ripple's going to slip up again in the future. Here's the deal. The SEC's clapping back at Ripple's claim that they've been super careful with their XRP moves. Ripple's been saying there's no legal gray area with XRP, but the court's not having any of it, especially after tossing out Ripple's fair notice defense. That's the one where Ripple was like, "You didn't tell us XRP could be treated like a security, SEC." Despite Ripple not stepping on any legal landmines since the lawsuit kicked off in 2020, the SEC's got this gut feeling that Ripple might trip up down the line. It's like they're saying, just because you haven't broken the vase yet doesn't mean you won't. Ripple's been trying to play nice, talking up their buddy-buddy relationship with the SEC since they first sold XRP back in 2013. But the SEC's not impressed. They're throwing shade at Ripple's attempts to lighten the legal load by pointing to their post-lawsuit restructuring and compliance efforts. The SEC's also calling foul on Ripple's sales activities. Ripple's been arguing that they're selling to the cool kids outside the U.S. and only to the VIP investors, but the SEC's not having any of that either. And those contract changes Ripple's been bragging about? The SEC's like, nice try, but no cigar. They're saying those tweaks aren't cutting it, and there are still some no-nos being crossed. To wrap it up, the SEC's making it crystal clear. They think an injunction is the only way to keep Ripple from going off the rails again in the future. They're pretty adamant that without it, Ripple might just hit replay on the same old tune. Now, Ripple's legal eagle, Stuart Alderodi, isn't taking this lying down. He's out there tweeting up a storm, slamming the SEC's approach and betting on a win for Ripple. He's hopeful that Ripple's arguments and reforms will win the day. Alderodi's also shining a light on how the crypto community's not too happy with the SEC's crypto management style, calling it inconsistent and a bit old-fashioned. With the final verdict expected in September 2024, both Ripple and the crypto crowd are on the edge of their seats. In the meantime, Ripple's not just sitting around. They're spreading their wings, announcing a strategic partnership with HashKey in Tokyo to tap into the Japanese market. It's all part of their master plan to go global and cement their spot in the digital finance world. Now let's talk about Coincheck's big leap to the Nasdaq, shall we? So Coincheck, this hotshot crypto exchange from Japan, is gearing up to hit the big leagues in the U.S. stock market. They're planning to list on Nasdaq with the cool ticker CNCK through a SPAC deal. It's like they're getting ready for their rockstar entrance sometime in Q2 or Q3 of 2024. This move is a pretty big deal for Coincheck and the whole crypto world. It's like rolling out the red carpet for cryptocurrencies on Wall Street, showing that digital currencies are not just a fad but a growing part of the global economy. It's following in the footsteps of Coinbase, which is like the Beyoncé of crypto exchanges. Analysts are buzzing about this because it's going to give Coincheck some serious street cred. We're talking better brand recognition, more cash flow, and a golden ticket to the Global Capital Markets Club. This could be the boost Coincheck needs to grow and spread its wings even further. Coincheck isn't new to the game. They're one of the big fish in Japan's crypto pond, with a whopping 1.98 million verified customers. They've got a buffet of trading services and products that keep their users coming back for more. By joining Nasdaq, Coincheck is making a promise to play by the rules, keep things crystal clear, and build trust with investors. It's like they're saying, "We're legit, and we're here to stay." Their Nasdaq debut is set to wave the flag for crypto, boosting confidence in the legitimacy and maturity of the industry. It's a sign that the crypto market is growing up and getting ready for its close-up, especially now, with the legal landscape and market vibes constantly changing. Exchanges that prioritize sticking to the rules, keeping things secure, and looking out for their customers are likely to thrive in the long run.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.